How do you buy a house in Australia? In this video, we're going to show you the exact process of buying a house in Australia, step by step. This in-depth video will help you learn how much deposit you actually need to buy a home in Australia, what home buying grants you'll be eligible for, if it's better to speak with a bank or mortgage broker, plus lots more. If you're wanting to buy a property in Australia, then this video is for you. Step number 1, decide you're ready to go. The first thing to know is that buying a home can usually take anywhere from 3 to 6 months. You might be thinking why this is the case, and that's purely because there's a lot involved in the process. From saving the deposit, to waiting to find the right property to come up, to getting your loan approved, and having the property settle so you can move in. The first question to ask yourself is, are you ready to buy a home? We had Sarah we recently helped. She always had a dream of owning her own home, but she'd always been hesitant to take the plunge. She wasn't sure if she was ready to take such a big financial decision, and had been content with renting an apartment. But as she got older, she started to feel like it was time for a change. That's when Sarah got in touch and decided it was time that she was ready to take the leap and buy her own home. She'd been saving up for years and felt confident in her ability to afford a mortgage. And when she began her search to find the right property in the areas she was looking at, she was amazed that there were a lot of options available to her. Sarah spent months searching listings and attending open homes trying to find the perfect home. She wanted something that was spacious and comfortable but was also affordable. After 3 months of searching, she finally found a house that seemed perfect. It was a charming 2-story home with a backyard and a beautiful front veranda. Sarah knew as soon as she saw it, this was a home that she'd been dreaming of. She made an offer on the house, and after some negotiation, the deal was sealed. Sarah was thrilled to finally be a homeowner, and she couldn't wait to start making her house her own. Once she purchased the property, she spent a few weeks painting and decorating and furnishing the home. And as Sarah settled into her home, she couldn't feel but a sense of accomplishment and pride. She'd always dreamed of owning her own home, and now that dream had finally come true. She knew that it took a lot of hard work and sacrifice to get to this point, but it was all worth it. Sarah was finally exactly where she wanted to be, and she couldn't be happier. So this is where you need to make a decision on whether you think it's the right timing for yourself. I'm sure many of you out there are probably weighing up whether to keep renting, stay at home, or whether it's worthwhile buying. As we said, ultimately it's going to come down to your own individual circumstances, your affordability, your comfort in the amount of cash you have, and also security in your job. Step number 2 is to know your budget. Now, knowing your budget isn't only about the dollars and cents on what you can afford, it's also understanding what the banks are requiring, their capacity assessments, their deposits they need, and everything around it. The first question you're probably thinking is, how much deposit do I need? The fact is that many people can now buy a home with as little as 5 to 8% of the property value as a deposit saved up. For example, if you're buying a property worth, say, $500,000, we can work with as little as $25,000. There are some things to keep in mind. The bigger deposit you have, the better it is, because you can avoid things like mortgage insurance. Having a larger deposit is ideal where possible, but it's not a deal breaker if you can't get it together. Keep in mind, if you are a first homeowner, there are a bunch of schemes and grants you might be eligible for. Depending on the state or where you're living, there is the First Homeowners Grant, which is available for brand new properties. This ranges from anywhere from $10,000 to $15,000 that the government will give you if you buy a brand new property. You've also got the Home Guarantee Scheme, which allows you to lend up to 95% of the property value with no mortgage insurance. There is criteria that applies. You need to be an Australian citizen. There is income cap, so if you're single, your income can't exceed $125,000. If you're in a couple, your income combined can't exceed $200,000. And there are price caps depending on where you're located. There's a maximum threshold in which you can purchase for. Effectively, if you qualify for the scheme, it means you can lend up to 95% of the property value with zero mortgage insurance. Now, if you don't qualify for any of these grants or schemes, you can also work with a parental guarantee. A parental guarantee works in the sense that you can still lend 100% of the property value plus costs by leveraging the equity in your parents' home as a second mortgage. A few things to be aware of here with a parental guarantee is if your parents look to sell the property in the near term and you've still got that guarantee associated with their property, that can cause issues because you'd have to refinance to remove the guarantee, or your parents would have to move the guarantee onto another property or potentially hold it against cash. So something to keep in mind if your folks are thinking of moving or selling. Other options available if you don't quite have your deposit together is if your family are willing to gift you funds. That's effectively where you get a lump sum of funds from your parents with a letter written to you saying that is a non-refundable, non-repayable gift. The banks can accept this as funds towards your deposit. It's also worth noting that depending on your profession, there are ways to get your mortgage insurance waived. If you're a nurse, you're a doctor, you're a lawyer, you're an accountant, you're a sporting professional, and there's a bunch of different other professionals that do qualify for mortgage insurance waiving options where effectively you can lend anywhere from 90 to 95% of the property value with the insurance waived. That's the first first thing to keep in mind when knowing your budget. You need to have your savings or deposits. Now, the next thing when knowing your budget is understanding the capacity or the amount the bank will lend you. It's worth noting when understanding your borrowing power that the amount that the bank will lend you varies from lender to lender. Also, keep in mind, just because the bank says you can lend $1 million doesn't mean you should borrow $1 million. If you were to borrow any amount of money, do your own personal due diligence where you work out your repayments not only now if rates were to rise, if there is anything on the horizon where you might go down to one income if you're a couple, or what might happen in the future that could affect your ability to meet your commitment. If you're wanting to do a quick borrowing assessment calculation right now, the easiest thing to do is times your annual income by 6. So let's say you're on $100,000, your rough borrowing capability is going to be $600,000. Once again, this is a very high level detail. If you've got liabilities, you've got personal loans, you've got HEX debts, your capacity will vary. And in some instances, the lenders will lend you more than this. This gives you a very quick calculation that you can get an understanding of where you might be positioned as of today. If you want a more accurate assessment, hit us up. We can look at your situation and give you an individual assessment based on an accurate assessment the lenders will look at. It's also worth mentioning that some of the online tools you might use to calculate your borrowing power isn't always accurate. Once again, talking with a mortgage broker like ourselves, we can run an assessment through a bank calculator and give you exact figures as to where you stand today. So far in knowing your deposit in step 2, we've talked about the deposit required. So remembering you need anywhere from a 5% deposit at a bare minimum. There are instances such as a parental guarantee where you need 0 deposit. The second thing we've looked at is your borrowing power. So to roughly work out your borrowing capability, 6 times your current income will give you a very rough indication as to what you can borrow as right now. The last thing to consider when knowing your budget is the buying costs associated. When buying a home, there are going to be a few extra costs that come up. Most of these costs you're going to need to cover. Let's have a look at some of the upfront costs that will be applicable. The first is stamp duty. This is going to be your biggest cost, and it does change from state to state, and there are thresholds and concessions available. For example, in some states, a $500,000 purchase has no stamp duty because it's under the threshold where stamp duty is waived. However, if you buy at $800,000, well then stamp duty can kick back in and you can be paying anywhere from about $30,000 or $20,000 in some cases in stamp duty, which is applicable. It's also worth noting in New South Wales, there are stamp duty changes coming to effect from the 15th of January 2023. We've done a video on this recently, so jump on our channel and search it where you can watch about all the details and how you might qualify for it if you're based in New South Wales. Other government costs to think about are mortgage registration and title registration fees. These range from a couple of $100s to a few $1,000. Once again, depends on the value of the property. Costs outside of the government, you've got your solicitor fees. These costs range from anywhere from $1,000 to $1,500, depending on the searches you do. Building and pest inspection allow about $500 here. Then other costs. Now, these are costs that are usually adjustments made on settlement for things like council rates and water bills for any overlap between the purchase date and the billing period. Let's also talk about costs that will be added to your loan. The major one is lender's mortgage insurance, which is compulsory and you do need to pay if you don't have a 20% deposit or you don't qualify for a mortgage insurance waiver, which we talked about earlier, whether you're under the home guarantee scheme or not in a profession that offers a mortgage insurance waiver. If you find these videos useful, it'd mean a lot if you could hit that subscribe button, which will keep you up to date with all things property and finance. As we talked about at the start of the video, we're going to show you the exact process of buying a home in Australia. So far, we've talked about step 1, which is deciding that you're ready to buy. Step 2, we talked about knowing your budget, from your deposit to your borrowing power, plus the costs involved. We're moving on to step 3 now, which is getting a pre-approval in place is certainly a good starting point. A pre-approval is effectively where you can get a bank to assess your situation. However, given we've seen so many rate changes and borrowing powers fluctuating quite rapidly in recent times, it is now recommended to get a pre-approval in place because in a lot of cases, you can get your borrowing power locked in for 3 months proceeding from that pre-approval date. So if there is a rate rise, you're not going to lose any borrowing capacity. Did you know for every 0.25% rate rise we see, your borrowing power actually reduces by about 3%, which can be devastating to a lot of home buyers out there, particularly if you've been pre-approved to your limit. A rate rise may be devastating and reduce your capacity by quite substantial amounts. So having that pre-approval in place will not only give you the confidence that your finances are in order, you can rest assured that the amount you've been pre-approved for will be the amount that you'll be able to get when you purchase a property. Now, not all banks are the same here. Some banks will give you a pre-approval, but they'll try and reassess your position based on the latest updated rates at time of purchase, which means your borrowing power how it could actually reduce if rates have increased. And this is where working with a great mortgage broker like ourselves can help you understand which lenders do what, because some lenders will actually lock in the pre-approved amount no matter if rates go up, down, sideways for the 3 months once you're locked in for a pre-approval. As I said, others will try and reassess you based on the updated assessment rates at that stage, which will mean your capacity will reduce if there has been changes. Now that you've got your pre-approval together, it's time to go house hunting. Step number 4, it's time to go house hunting. Now that you know how much you can afford to buy spending on your first home, it'll help to narrow down the exact areas and types of homes that you can afford. We call this the rule of 3. This is where being specific helps. I know when I looked to buy my first home, I was looking in Brisbane's northern suburbs, from Ashgrove to North Lakes and everything in between. This was a 42-kilometer radius of properties I was searching within. I was viewing houses, townhouses and units, you name it, and I was there. On any given Saturday, I'd be driving around for hours, going from one side of town to the other side of town, viewing properties. It took me 18 months of heartache only to find that I didn't have any success in finding the right home. It was only when I sat down and wrote down exactly what I was looking for in a property that I had success. I realized that I wanted to be close to the city so I could reduce the commuting time it took me to get to work. This meant that townhouses and houses were out of my budget as I was looking for properties within a 5-kilometer radius of the city. I was also able to narrow down the suburbs I was looking for. Previously, I was looking at 20 plus suburbs. Once I decided I wanted to be within 5 kilometers of the city, I was able to narrow down to 3 suburbs I felt would be great for me to live in. I narrowed down the 3 suburbs, I was able to check out many more open homes each weekend. And because I was only looking at units, I actually became a bit of an expert and I was able to tell the differences between a unit that was reasonably priced and a unit that wasn't worth the money the vendor was looking for. I went from 18 months of searching with no success to finding the right property within 6 weeks. This is where being specific in your search helps. Limit the number of suburbs you're looking at to no more than 3. We've had many clients like myself who had a massive search criteria and heaps of suburbs they were looking at initially, and it was only once they brought their suburbs down, like myself, to 3 that they were able to have tremendous success. The key takeaway here is be specific and limit your search area to no more than 3 suburbs. It's also recommended to go and house hunt earlier, even if you're still saving your deposit, because by getting out there, you'll get to learn what type of properties you like, what type of areas you want to be in, and also what to look for when you go through and inspect a property. They say you should spend at least 3 to 6 months looking around at different properties to get a feel. I was also given advice when I was a first homeowner that I should go to at least 100 open homes before I even consider making an offer, just so that I can understand the basics of property and what to look for. Bonus tip time, there's also a bunch of great websites you can use to research property. Realestate.com has a bunch of nifty tools. If you go to realestate.com.au/neighborhoods, that gives you an area of medium sale prices in the areas that you're looking at. Once again, you want to get down to 3 suburbs. So if you're looking in an area and the median price is well above what your budget is, you might need to actually look at a different area because this property is going to be out of your price range. There's also another website called Walk Score. This gives you an idea of the livability of an area so you can gauge if this is going to be the right area for you or your family. There's also Core Logic, which gives you some great information and insights into the property, the sales history, and what it might be worth. If you're working with a mortgage broker like ourselves, we do complimentary reports for our customers, which are personalized for the properties they're looking at. These are great reports, gives you a lot of insights. And once again, if you're working with a broker or you're working with ourselves, we can do these for you at any stage, which is absolutely free. Step number 5 is to decide if this is the right home for you. You've come across the perfect property, and now it's time to make the decision on what you think the property's worth. As I talked about earlier, we have access to RP Data Core Logic, where we can do a property report on the property you might be interested, which will give you an analysis on properties in the area that are selling and what it is estimated to be worth. It's also worth looking at comparator sales. This is pretty easy to do. If you go on realestate or domain.com.au and look under their sold section, it's ideal to find properties that have recently sold within the last 30 days, similar to the property that you're interested in. For example, if you have a property that you're interested in, let's say it's 3 bedroom, 2 bathroom with 300 square meters, and you found a very similar property that sold 4 weeks ago for $500,000, well, you can bet your bottom dollar that the property you're looking at, if it's comparable, sold in a similar area, is likely to sell for around that price. Other things you should do is when you're at the open home, you should see how many people are going through the property. If there's a large number of buyers going through the property, it gives you a pretty good gauge that the property might be popular and potentially sell quicker, which means if you are going to make an offer, you don't want to be making any low ball offers, because you might find that there's other people that will be willing to pay a higher price, which invariably might mean that the property will be sold quicker and sooner than you'd like. On the flip side, if you go to the open home and you're the only anyone there or there's one other person there, it gives you an indication that there might not be much interest on the property, so you can start your negotiations a little bit lower. I've actually done a full video on how to negotiate in a buyer's market. If you want to check it out, visit our channel page where you can search and find it. Some other suggestions before you make an offer is to go and drive around the property at different times, night and day. Jump on Google Maps where you can work out your time taken for commuting to work and schools. Look at the school catchments. Jump on Facebook and see if there's a community page. Spend some time to get to know the area. Also, keep in mind, this might not be your forever home. These days, Australians spend on average 7 years in their home before moving again. So you might view this as a stepping stone. Step number 6, get ready to make your offer. This is where you're going to contact the agent and ask them that you're ready to make an offer. They're either going to give you a one-page expression of interest where you can put your offer in writing and provide it to them, or they're going to give you a full contract to sell, which you might need to get reviewed by your solicitor. The last one is sometimes the agents might ask for the offer verbally or in an email. It's always advisable never to say anything verbally. We've had plenty of clients make offers via email, so as long as it's in writing, that's the main thing. Now the agent's giving you the expression of interest, or you're writing them an email, or you've got the contract to sale. It's time for step 7, preparing your offer and special conditions. There are 2 main things you'll need to cover in the offer. The first is the price you're willing to pay, and the second is the terms and conditions, also known as clauses, which are the terms around your offer and help protect you and the vendor. Let's break it down and start off with the price. How do you come up with a price you're willing to pay for the home? Once again, if you've done your rounds with looking at open homes, you've been on realestate.com, you should have a good idea on what the home is worth and how much you're willing to pay for it. At this stage, if you're working with a mortgage broker like ourselves, it's good to have a chat with them, make sure of your numbers and make sure everything still stacks up. And they can be a good sounding board to sort of say, hey, I'm thinking of offering this, and if the numbers still stack up from a financial perspective. The second bit to the offer is deciding what conditions you want in the offer. Conditions on the contract are usually focused more on time frames. So for example, when the settlement's going to happen, when your finance is going to be approved, when you're going to have your building and pest completed. So depending on which state you're in, say you're in New South Wales or ACT, they usually have a cooling off period. So you'd say, I'll make my offer subject to 6-week settlement, and I'd like a 10-day cooling off period. In that 10 days, you have a chance to get your building and pest inspection completed and your finances approved. If something were to go awry and you couldn't get your finances or your building and pest fell over, you can pull out of the contract in the cooling off period, but you lose 0.25% of the purchase amount. So on $1 million purchase, you lose $2,500 during the cooling off period. In other states like Queensland, Victoria, and WA, they allow a finance period. So for example, you can put a 14-day finance period, a 14-day building and pest, and a 30-day settlement. If you were to pull out of the contract and you had evidence that your finances were knocked back, you'd actually be able to tear up the contract. You'd lose absolutely nothing. So unlike the cooling off period, you don't lose a 0.25%. This is due to the fact that the contract has a clause which stipulates that it is subject to finance, and if you don't get your finances through, the contract is null and void. When making an expression of interest offer or an email offer, nothing's locked in at this stage, so you can still back out if you change your mind. If you are making an offer on the contract to sell, it's wise to get a solicitor read over the contract before entering into it, because once the contract's agreed upon on the full copy of the contract to sell, you are locked in, which means if you did get cold feet and decide to change your mind, it can be a little bit tricky to get out of it. Once again, speak with your solicitor here, work with your mortgage broker, and understand all the details before you commit to anything. So now you've made your offer. Step 8 is to think about your counter offer. It's not always the case that the vendor is going to come back to you and try to renegotiate. Sometimes they'll just accept your offer. Other times they might turn around and say, hey, look, the offer's a little bit too low. How about you meet us here? We'll get a deal done. So there can be a bit of backing and forthing. Once again, the real estate agent will typically give you a call and give you feedback. Sometimes I have clients ask me if they should follow up the real estate agent. Typically, there's no right or wrong here. Once again, it depends on how much interest there was on the property. If there's a bunch of interest, you might have entered into a multiple offer situation. The agent should let you know about this, and that's usually where you need to make a first and final offer. If you're the only one negotiating, the real estate agent will usually keep you in the loop with what's happening. Typically, once you've submitted your offer, the agent will usually come back to you within a day or two. As I mentioned before, they may accept it first time, or sometimes they'll come back with a counter offer. Once the negotiations are over, we move to step 9, which is signing the contract to sale. Once your offer has been accepted, the real estate agent will complete the contract to sale so you can sign. The process can vary slightly depending on where you're located. This is where you want to get your solicitor involved and start to review the contract. They'll also advise you from a legal perspective and searches that you might need to do to protect protect yourself. Some things to keep in mind when you are filling in the contract to sale or giving any details to the real estate agent, you want to make sure your name is spelled correctly and is your full legal name, including all middle names. You also want to check on the contract to sale that the price and terms you'd previously negotiated are all correct as per what you agreed upon. At this stage, when you are signing the contract, it is a legally binding agreement between you and the owner of the property. It's critical that you go through your own solicitor or conveyancer to ensure the contract is sound so the transaction can be completed successfully. Take care here. If you're buying a property at auction, you don't have an ability to add a finance clause in the contract. You also don't have an ability to do a building and pest clause. Once again, you need to sit down with a solicitor here, understand what you're getting yourself into, because auctions are unconditionally locking you in, which means you are legally bound to purchase a property, even though you can't get your finances approved prior to bidding at auction. You can get a pre-approval prior to bidding at auction, but a pre-approval doesn't guarantee that they're going to give you a loan approval. Once again, it's important to know what you're getting into if you are thinking of going to auction. 10 is to pay the first deposit. Typically, when you sign a contract to sell, there's usually an initial deposit payable once a contract has been accepted. That can range from anywhere from $1,000 to $5,000, and that gets transferred to the real estate agent's trust account. When you are transferring any money, you'll always want to triple check with the real estate agent. I'd give them a call, get them to repeat their BSB and account number. This is where it pays to be super cautious here, because you don't want to get in a situation where you've transferred the money, but the money's gone to the wrong account, to the wrong person, and the real estate agent says there's nothing in their trust account. The first deposit is refundable. So if you put $1,000 down and the contract has a cooling off or a finance or a building and pest clause and you pull out for one of these reasons, you'd actually get your initial deposit back. However, once you've satisfied your cooling off clause or your building and pest and finance clause, the contract is unconditionally locked in, and at that stage you pay your second deposit. This second deposit can range from anywhere from 2% of the purchase price right up to 10% of the purchase price. This means that the contract is unconditionally locked in and that deposit is non-refundable. The last deposit payable is the final deposit amount required for settlement. Usually you'll transfer this to either your bank that you're getting your loan approval through or to your solicitor. Once again, if you're transferring any money anywhere, you want to triple check that BSB and account number, because the last thing you want to do is transfer money, not double check it, and then those funds don't turn up. Also, once the contract is accepted, as your mortgage broker, we already have your pre-approval in order, so we'll arrange the property valuation through the bank to make sure that the property is worth what you've paid for it. It is pretty rare that the valuation will come in under what you've purchased. You are the market, you've dictated the property's value. Typically, the valuer will go out there and go, yep, the property matches the purchase price. There's no issues with valuations here. There can be, in some instances, times where the valuer actually undervalues the property compared to the valuation, and this can cause issues with your finances. It's probably more an exception rather than the rule, and if that comes up as your mortgage broker, we'd help navigate you around that and get you in a favorable position, which usually ranges from moving banks to getting other valuers out there to reassess the situation. Step number 11, arranging the home and contents insurance. Once again, depending on the state you're in and depending on what type of property you're buying, the contents and home insurance will need to be arranged from once a contract has been dated. Check with your solicitor here. Every state is slightly different. If you're buying a property that's in a body corporate like a townhouse or a unit, this is also worth checking, because sometimes you don't need to cover the actual home itself because the body corp insurance covers that. Once again, chat with your mortgage broker, chat with your solicitor, and they'll run you through what you need to do here. Step number 12 is booking in your building and pest inspection. A building and pest inspection is completed after the contract is signing and is done by two separate experts. The building specialist will check the structure of the roof, walls, floors, fences, and adjoining buildings to look for things such as cracking, faults, asbestos, and other movements. It's wise to book this in as soon as the offer is accepted. There's a lot of companies that do both the building and pest inspection and send both specialists at the same time. We always recommend going to the building and pest inspection with them, because you can take away a lot more when you're there belly to belly with the building and pest inspections rather than when you read their report, which has a lot of caveats in there. So we always recommend go to the inspection, hear out what they have to say, and you'll understand the risks associated with the property. You'll also be able to gauge how problematic any of the issues that are raised then and there. The cost for the building and pest inspection ranges from anywhere from $500 to $750. It all depends on the property. As your mortgage broker, we can recommend someone here. Step 13, if you haven't already, we'd start your lending application. So if you don't have a pre-approval, we'd actually need to start your finance application, review your option, get things like your pay slips, your bank statements, if you're self-employed, your tax returns, and review your situation and make recommendations on the lenders that are going to be most suitable for you. Step 14 is talking with your solicitor. Once again, you probably were talking with your solicitor when you signed the contract, but at this stage, you want to talk with your solicitor because they'll have paperwork you'll need to fill in. They'll also be searches that they'll want you to do. Effectively, they're going to guide you through the process around the legalities and everything you need to know to make sure you're buying a property that's not going to have any issues down the track. Step 15 is now that your loan's approved, it's time to sign your loan contract. Once the bank's completed their assessment and given you the loan approval, they're going to issue loan contracts that specify all the details and terms to your loan contract. Nowadays, the contracts are done all electronically through DocuSign, so you can electronically sign them. You can run through these with your mortgage broker. And the beautiful thing here is a lot of the banks have moved away from pen to paper. As I said, electronic signing, so it makes it super simple. Also, you want to check with your mortgage broker here that there's no outstanding conditions such as credit card closures, HEX debts closing, or home insurance that needs to be provided, because at this stage you want to make sure you have it squared away so that you don't have any issues or things that'll cause delays for settlement. Step number 16 is once your home loan's been approved, you need to pay that second deposit. As we talked about earlier, there's usually a second deposit payable once your contract's gone unconditional. So effectively your finances are approved, your building and pest has been satisfactory. Now it's time to pay your second deposit, which is anywhere from 2, 3 to 10% of the purchase price. I can't stress this enough. Before you make any transfers, you want to double check, triple check with the solicitor, with the real estate agent, the BSB and account numbers, because you want to make sure those funds turn up in the correct account. Step number 18, it's time for settlement. Crack the champagne, it's time to celebrate. Your settlement date, you don't need to be there. The solicitor will take care of all the details and you'll get notified once settlement's completed, where you can go and pick up the keys from the real estate agent. Now, before settlement happens, you can do a pre-purchase inspection. This is effectively where you go through the property one last time, where you can make sure there's no issues with the property before the settlement takes place. For example, if the tenants have left a bunch of rubbish on the property, you can actually request that they remove it prior to the settlement happening. Otherwise, you can have the settlement delayed subject to this being completed. If you do have any issues here, this is where your solicitor can step in, liaise with the other party, and make sure everything's completed satisfactory. And the last step is, now that you've got the home, your first home loan repayment. Your first official home loan repayment is due 1 month after the settlement takes place. Now, depending on how you set up your repayments, if you're paying fortnightly or weekly, obviously that's going to happen a little bit earlier. A lot of the times you can change your repayments through your online banking applications, through the banks, super simple to manage. But do be aware, keep a lookout for the first payment coming out, because a lot of the times there's a lot happening and you don't want to miss that first repayment. Did you know here at Hunter Galloway, we get mortgages approved? If you're looking for a great mortgage broker, we can help. We help first homeowners and home buyers right around Australia. If you're living in Australia and looking for a mortgage broker, we can help. Visit us online at huntergalloway.com.au and fill in our contact form, or call us on 1300 088 065, and we'll see you next time.